Hey everybody, it's Shannon from Alphatrends.net. Today's Friday, the 14th of July, and the market's finished with a little bit of profit taking this at the end of the week here, but still quite a solid week for the markets. Everything except for Bitcoin, which lost its weekly gains with today's close to 5% loss. The rest of the markets, lost a little bit of ground here today, but still oil solid 2%. Bank stocks up 2%. They lost a little bit after their earnings, so the market ran up into those earnings and then sold off. Let's take a look at these charts and make some sense of it. Earlier in the week, I was a little bit cautious ahead of the CPI. It was just a little bit uncertain as to what the market wanted to do while we were trapped below that 5-day moving average for a day. But the buyers, of course, took control with that CPI report, and now we're going to keep an eye on the anchored volume weighted average price from that. Currently, we're still holding above it. We're also above a rising 20-day moving average on the daily time frame. Everything here says we're still in a beautiful uptrend. As we mentioned previously, the people who talk about double tops at this point don't know what a double top is. That's just a level where it found supply twice. In order for it to have been a double top, it would have had to break below here to confirm a double top. That clearly didn't happen, and you might even, call this a cup and handle if you were so inclined, because that's what it looks like. Or an ascending triangle would be another way to look at it. Whatever you call it, it's bullish. We broke to the upside. We've got a rising 5-day moving average. So we're going to be looking at first that anchored volume weighted average price from the CPI report to hold as support next week. If that fails, well, then the 5-day moving average would be our next level of interest, as that will continue to move higher. And then if that fails, then we want to look to see that this 444-ish prior resistance holds. So for now, it's still very bullish. The market's getting a little bit extended, but that's what bull markets do. Just like oversold in a downtrend, like we had seen last year, it continues lower. But now we're in a bull market again in the Nasdaq. Creeping up rather to those all-time highs, which aren't that far away, just another 10% or so. So when we look at the two time frames, here again on the right is the 30-minute time frame with the 5-day moving average, and this line here is where we were 5 days ago. So that just helps me try to anticipate the direction of the 5-day moving average, similar to the 20-day moving average right here. And for the 50, I've simply got a dot on there to designate it, and I thought I had a dot on the 200-day moving average, but I guess I don't. Either way, this is clearly still a bull market. We saw the same thing, a little bit of indecision earlier in the week. I was looking at it as if it broke below here, then perhaps it would lead to a test of the 50-day moving average. Instead, of course, we got the CPI report. The market broke out. It pulled back, got back above that daily volume weighted average price on Wednesday, and up and away from there, minus a little bit of profit taking here today. What we'll do though is we'll keep an eye on the anchor from these highs as well that it made today in the Nasdaq and in the S&P 500. We want to look at that and say we now know that this was an important near-term high. Whether that means we take it out on Monday or Tuesday of next week is not really relevant, but I want to just be a little bit cautious about new purchases, especially of the SPY, if it maintains below there. Otherwise, it looks like it's going to perhaps pinch between those and then either continue to the upside. In that case, you would want to be a buyer here, or break back down and go test some of these lower levels. I'm not into shorting when we have a primary uptrend, so that's not a trade I would necessarily take. Maybe for a quick intraday trade, but definitely not for a longer term trade. So the Nasdaq also, we'll keep an eye on that anchor from the high that it made today. And if it stays below that, well, then there's no reason to be a buyer. It's pretty straightforward. The Russell 2000 is up 10% year to date after this week's 3.6% rally. And that came, in the same place where it has shown previous support at the 200-day moving average year to date anchor. And previously I had been saying this market was a waste of time. I kind of changed my tune over here on Wednesday. If you saw Wednesday's video that I posted on YouTube, and there we now have, the market got extended here. So I wouldn't be surprised at all to see a test, this coming week of maybe the anchored VWAP from this low. That would bring it to this prior peak as well, and that would also bring it to this anchored volume weighted average price from the all-time high. So it would be good to see if we pull back to that anchored volume weighted average price from the all-time high, and instead of last time breaking down through it, we instead hold that, then that could pave the way. So it looks like, pull back down in towards 188 and a half is 189. That's what I'd like to see. The market doesn't care what I want, but that's how I'd like to see it kind of work off this overbought here a little bit, and then perhaps look to be a buyer sometime, let's say middle of next week, if it were to do something like this. So again, this is just anticipatory analysis, that it comes down to that, maybe a little bit of a shakeout, and then that 5-day moving average gets the chance to kind of come down, flatten out, and then we would want to be a buyer over here with a stop under one of these higher lows, whatever makes most sense to you for your time frame. But I don't want to buy an extended market like this that just rallied again from 181 to 193, 13 points. That's about what, 7-8% off that recent low. Not a time to be a buyer. Semiconductors pulled back a little bit deeper, and this is what I told subscribers, is that I wouldn't be surprised at all to see a break of the all-time highs in the semiconductors, and then that gets sold into. That's exactly what we had happen today. This line was the old all-time high. We broke through that today, and the people who chased the breakout got what breakout chasers usually get. They get sold into. And this market is now, this one's been the biggest leader of the year, up 54.5%. So, some further backing and filling, even time correction wouldn't be a bad thing. We are below the anchored VWAP, or we're actually right on the anchored VWAP from the CPI. So maybe we see something like this, and maybe it just continues to pull back a little bit. That wouldn't be a horrible thing, but it wouldn't, help a bullish case for the Nasdaq. So the bullish scenario would, maybe look something like this. But semiconductors, I'd say, definitely raise your caution level after a breakout from extended levels. It's just not a good time to be a buyer in there. Biotechs did exactly what we wanted them to do, and they provided a great trade opportunity. We saw that last week. We were talking about that this could be a failed break lower, and if so, I was looking to be a buyer and did buy up in this area here, and I was looking for it to come up to the conjunction of the 20 and 50-day moving average, and that was also the anchored volume weighted average price from this peak right here. That's that purple line that I just put in. So we found sellers exactly where we were supposed to find sellers. There is structure and order to the market. Today we pulled back right down to the anchor from this gap down, from where that failed move began. So next week, I think that the biotechs, if they're to, continue to just kind of consolidate in here a little bit, and then maybe pave the way for a break of, once we get this 20-day moving average to flatten out. When would that occur? Well, this was 20 days ago, so we get rid of all this data next week. So maybe next week or the week after, this would be in a very good position where that 20-day moving average would come up, back up through the 50-day moving average, excuse me, and then provide a good opportunity on this daily time frame that could lead to something bigger, maybe a test of these prior highs on the weekly time frame. These are the concepts of multiple time frame analysis, what I wrote about in my first book, and of course we're always talking about what I spoke about here in my wrote about in my second book, The Maximum Trading Gains with Anchored VWAP. These concepts are all explained in great detail. If anyone has questions about them, don't ask me in the comments. Read the book first, then I'm happy to help you, make more sense of it if it's not making sense to you. The financials, I think I said on Wednesday that, the good news about the financials is that they've had a nice run away from this prior band of resistance where we see the 200-day moving average is now rising, and that if selling occurred after the earnings reports, that it would be okay because it wouldn't be able to really damage this emerging strength. Even if we were to pull back all the way down into here and then continue higher, maybe, in a couple weeks or so, that wouldn't be a bad thing. But now we've got all these moving averages compressed together, kind of huddled up. We're above the year-to-date anchored volume weighted average price. Here's our anchor off of the all-time high. Boy, that's probably a coincidence, right? That we saw the anchor off the all-time high hit the exact high today that was sold into. Definitely not a coincidence. People, this is what people, institutions are looking at and basing decisions on. You definitely want to have an anchor from today. This was an important day for the financials. I wouldn't be a buyer until we can get above and hold above that again. Now, the first level of potential support down near 34, that's your month to date anchored volume weighted average price, as well as this prior little resistance. So let's go back to the 30-minute and daily time frame together. I'm going to avoid these things. I think it's likely that they, maybe continue a little bit lower and then are able to rebuild for a move higher. But right now, no reason to be involved. I've been calling the energy names as basically a waste of time. They came right up to where they were supposed to find supply at the 200-day moving average, and they got hit in here a little bit today. So, just be careful. It seems as though a lot of stocks have had big runs. And as I was pointing out on Twitter, up to key moving averages like Coinbase, right up to the anchored volume weighted average price from the IPO. You've got, I mean, all kinds of stocks that have gone up to these recent important levels. Anyways, I will talk more about that another time. One thing I also wanted to follow up on was ARKF. If you recall, a couple months ago, I said it looks like it's finally time to buy this right in here, ARKF. And now we've had that run and it's gone past the place I thought it might originally find a little bit of selling on that breakout. Now we're up to this level here. So huge rally in this ARKF. If you bought it as an investment, I said that your stop ought to go under here and then keep raising it up under these stops. Well, this stop is so far away, I'd say take a little bit off because it is extended. I wouldn't be surprised to see a pullback like this, and then you could always just buy it back, but lock in some gains. That's a key to successful trading and successful investing.